QuickBooks Pro Desktop 2021 Pay Employees Form. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars practice file. We currently have the home page open. You can open the home page by going to the company dropdown, selecting home page. We also have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. And you want to make sure that it's either collapsed or uncollapsed depending on whether you want to see or not see the open windows. We're going to be down here in the employees section. We're now going to be focusing in on the transactions within it. So remember, every time you enter a transaction, you want to think, where does it fit in the flow, or which flow does it fit in? And then what's the form that's going to be used in order to process that? In this case, we're going to be saying it's the pay employees form. And then what's going to be the impact in the financial statements? The pay employee forms will have a substantial impact on the financial statements, one of the more complex journal entries that will be had here. So remember, if you use this form, you got to have payroll on in some way, shape, or form. The 2021 and earlier versions have a manual payroll, but the manual payroll in 2021 is located in a separate place. So if you just want to practice, again, I don't recommend turning this on for actually processing payroll, because you'll have to actually calculate manually the payroll taxes, which is great for practice, but I wouldn't use it for actual payroll. So you want to get advice on that. But you go to the edit dropdown, preferences, and then you want to be in the pay employees and company files and turn on this manual payroll. And then I'm going to close this back out. That's when you will see this arrow down below. If you have some software other than 2021 or some prior version, then you can use the help menu, go to the help icon, and if you type in manual payroll, you may be able to set up the manual payroll there so you can test it out without actually purchasing the payroll. So if we go into the pay employees section, then when we process the payroll, we would go through this process to pay the employees. We would have the pay period end date and then the check date. Now, the pay period end will depend on how often we pay the employees. Do we pay them weekly? Do we pay them bi-weekly? Do we pay them monthly? Semi-monthly. So then you can have, and that information would be set up when you set up the payroll process, which we will go through when we do the practice problem. So when we run the practice problem, we'll set up the manual payroll, we'll set up the employees, we'll set up our payroll methods, and then we will enter this data. So then you have the pay period ends and the paycheck date. Now the check date, of course, could be something other than a check. Check means, for QuickBooks, the form that's going to be decreasing the checking account. So if you pay in some other way, QuickBooks will still use basically a check form. Notice that the period end date may not be the same date as the paycheck. They wouldn't be this far different, right? But you might have the period end at the end of February and then the check date at some day in March, so that you could have some time to process the checks. That could be quite common, and that means that your payroll process might not line up to a perfect accrual type of method, and you might have adjusting entries at the end of the time period for lining up to a perfect accrual basis on a periodic system, a periodic basis at the end of the month or year. And then it would be decreasing the checking account typically. You can print the checks from the system. If you print the checks from the system, like printing all checks from the system, you'd still have to buy the checks. You can't print the check on just a blank piece of paper, but you can buy the pre-printed checks with pre-numbered checks in it, put them into the printer in the proper way, and then it'll print what is needed when you process the checks. Or you can handwrite the checks and line up the check number, or if you're using some other payment, then you wouldn't have the check number here, but you'd still be processing, in essence, basically the check form, that form being the form that's going to be decreasing the checking account. Then you've got the employee information down below, that these are going to be the employees we pay. We have 2 employees in this example, and you can edit this information. Now, if you had the full service payroll and you had someone like Adam here, who is a salaried employee, then everything hopefully would be populated already for you at this point in time, such as the salary has already been populated, and that's down here. But then in the manual payroll, we would then have to calculate the withholdings. So then you'd have to go down here and calculate it. That's the thing that is great for practice, because you get to see what actually happens down here, whereas if the computer just does it for you, then you probably just process the thing and you don't know exactly what is going on possibly. But again, especially this federal income tax, you kind of want that to be calculated for you within QuickBooks because it can be complex and it'll be dependent on some of the information provided on the W-4. So if we calculate this just for an example, 4583.33 times 0.062 is often what the Social Security will typically be. So that would be about 284.17. And then, now I recorded it. Hold on a sec. Don't hit enter or it's going to record it. And then if I go back into it and I say that Medicare, if I take the wages of 4583.33 times 0.0145, that's usually the Medicare or something like that, 66.46. And then the federal income tax, again, this is going to be more complex. We'll have to actually typically use a system to calculate that, look at tables, and that's what's really useful for QuickBooks to have the tables internally calculated for the federal income tax because it'll be dependent on marital status and whatnot. But let's just say it's 110 here if we look it up. That would give us then the net check down here. So that would be the net check. And then we, on the employer side, would be paying Social Security and Medicare. So let's say we paid 284.17. And I'm not actually going to enter this. I'm just going to practice here. And then the 66.46 here. And then we would have federal unemployment, most likely depending on the quarter and whether they have hit the cap. But these are the most basic or common or the universal, at least in the U.S., kind of payroll taxes that you would have, the federal taxes. Then you could have state taxes that would be included here as well as items that could be included on either side. And you could have then other kind of compensation or other kind of withholdings like a 401k plan and whatnot that could go in here as well. We will talk more about that and maybe in a little bit after the whole practice problem to get into payroll itself, because payroll could be a whole course in and of itself. And we do have a course on payroll if you want to take a look at a full course on it. But that's the general idea. So then if we look at this, we would say, okay, well, what's the actual transaction or journal entry that's going to happen when we record this? Well, we're going to say there's going to be a cash is going to be affected. It's going to be going down by the net check, $4,122.70 in this case it would be. And then we would have the expense for payroll expense would be the other side, which would be easy if it wasn't for the withholdings. But we have these withholdings, so what's going to be the expense? It's going to be for the full amount that was earned, the 4583, or it's down here the 4583.33. The difference between those two is going to go to what we took from the employee in order to pay their taxes, meaning these three items, in theory, are not taxes on us, the employer. Once again, the IRS just forced us to be their tax collector, right? These are not taxes that supposedly we are paying. They're taxes that the employee are paying, but the government has leverage on us to force us to be their tax collector, right? So these are the employee's taxes. We're just forced to do the collecting job. So now we've taken the money out of their wages, as we've been leveraged to do by the government, and then we're going to be paying that to the government. So that's going to be increase in the payroll liability because we owe it to the government. It's not our money, we owe it to the government. And then we have the employer taxes over here, which will match Social Security and Medicare. We could have state taxes as well, depending on the state. And we would have federal unemployment, which is a smaller tax, but that could be an impact as well. These are taxes that we owe over and above the wages. So in other words, this is what the employee earned, and we're still paying that out in some way, shape, or form at some point, just not all to the employee, but we're paying it on the employee's behalf to the government. This over here, we're paying over and above what the employee earns. These are taxes that the government imposes on us, not based on our earnings, but based on the employee earnings. And that's going to be Social Security and Medicare. That will then increase the expense. You can call these payroll tax expenses, or you can group them into payroll expenses as well. But if you break out the payroll taxes, they will be these items. The other side of this, increase in the liability for payroll tax liability. Okay, so I'm going to close this out and say I don't want to save that, so I'll go ahead and say yes. And then Erica, same process, except for Erica is an hourly employee, so you have one more step here, which is to put the number of hours worked, which would then calculate the hourly rate, and then you go through the same process of the withholdings. Let's take a look at this on the financials. I'm going to close this out, and say your payroll is saved, okay. And then I'm going to go to the reports drop down, company and financial. We'll take a look at the balance sheet standard first, and changing the dates up top. I'm going to change the dates from 01/01/21 to 12/31/21 and go ahead and run that report. So we know that when we process the check, it's going to be a check. So the checking account's going to go down. We know that. I'm going to go down to the bottom here. We're going to look at Adam's paycheck. And so there's Adam's paycheck. Now, these are a little bit different numbers than I put in there because this is what was actually run and the federal income tax was not the same. But the net check was the 3512. That's what we actually sent out to Atom in the form of payment. It would be a check or it could be electronic transfer, same kind of process. And then if I go to the detail, that's the net check. That's the net check, even though Atom earned $4,583.33. Atom had to pay payroll taxes, and we had to be the tax collector to make Atom pay the payroll taxes. That's what these taxes are. So that's why they got the net check down here. Let's go to the other side, which is going to be on the income statement. So we're going to say on the income statement, we're going to go to reports, company financial, and the profit and loss dates 01/01/21 to 12/31/21. And then we have our payroll expense, which is the other side. Now this gets complicated because they're breaking things out here, but we're looking at this check for Atom. Notice this amount here is the whole thing. The payroll expense then that we're recording is the whole amount, meaning the gross check. On the payroll expense side, we're recording the whole payroll expense as if we paid Atom the whole amount, right? We're not recording the net check down here. We're recording the whole amount as payroll expense. Because really, that's what Atom earned. For an expense for us, it's all Atom's earnings. That's what Atom earned. Even though Atom only got this amount, because again, it's not our fault that these payroll taxes were taken out. We're just the person that was forced to be the tax collector. So on the expense side of things, we record the whole payroll tax expense. The difference then, these three amounts that Atom should have got, are going to the government, and we are forced to be the ones to take it from Atom and then give it to the government. So if we close this back out, that's then going to a liability account, closing this back out, back to the balance sheet. If we then go into the liabilities, we'll have our payroll liabilities here, and we're increasing the payroll liabilities. If we go down and we look at Atom here, this amount, that's the federal income tax, Social Security, and Medicare. This is increase in the payable that we took from Atom that we're then going to have to pay to the federal government some point after we run the payroll. That's going to be these three items. Now you might say, well, why are these two duplicated? That looks like that's Social Security and that's Medicare that were in there two times. And that's the other side of the transaction. That's our employer taxes. So our employer taxes are those items that we have to pay over and above the employee wages. Those are the taxes that we're being charged on, not on our income, but on the employee income. So if I double click on this item, here's our paycheck. So these items here, these are the three items that are the employee's taxes, that we're just the tax collector on them. Those are not our taxes. They're not subject to us in theory. And these taxes over here are subject to us. These are our taxes that we have to pay over and above the earnings of the employee. We didn't just take them out of the employee wages. We have to actually pay these based on the employee wages. So these are the actual payroll taxes. That's why they're doubled up here. If I close this back out, that's why you have a double up of Social Security and Medicare, because we're including the employer and employee portion of the taxes that we're going to have to pay to the government at some point after the payroll was processed. The other side of that then is going to be on the P&L, the profit and loss. So if we go into the profit and loss report, then you could break those other items out into payroll tax expense. Only the employer portion could be broken out into another account called payroll tax expense. Why wouldn't the employee payroll taxes? Why wouldn't the employee's Social Security and Medicare be broken out into another account called payroll taxes? They are payroll taxes, aren't they? Yes, but they're not payroll taxes to us, to us, the company. They're not the payroll taxes that we're paying over and above the wages, the earnings of the company. They're the payroll taxes that are being paid by the employee, and they're part of the payroll earnings of the employee. So therefore, those should be included in the earnings of the employee, even though we took them from the employee and paid the government. The payroll taxes are our taxes that we pay as the government over and above the gross pay of the employee. But we have them grouped in here with payroll expenses because that's what QuickBooks, does by default. And so we have then these two taxes down here. These are Social Security and Medicare. Notice they're only entered here one time because these represent the employer portion of the payroll taxes. What we owe over and above the gross pay, which is this item that includes what the employee got, the net check, and the payroll taxes. The gross pay is up here, and then our payroll taxes down below. So that's going to be kind of the full process. Notice we looked at that for one employee. You can have a similar process, and notice how it's broken out separately for each employee and each payroll period. We just looked at one employee for one payroll period, and we're only paying people monthly. So if you pay people weekly or bi-weekly and you have more than 2 employees, and if you have state taxes and other withholdings and benefits such as a 401k plan or other retirement plan, then the complexity of this will get more complex. And we do have a course on the payroll. Once again, just remember that payroll is becoming more of a specialty area as well due to the added complexity. So it's something that might interest you to kind of specialize in. Now you can also take a look at other like supplemental reports related to payroll reports. If we hit the drop down up top, then we've got the employee reports, including the employee and payroll reports, and you could take a look at these reports as well. We're going to have to report the payroll taxes quarterly on the 941s and then yearly with the 940s and the W-2s and so on and so forth. So this information, of course, will supplement some of the information that would be recorded on the financials, just like we saw the supplementation for reports such as the accounts receivable and the accounts payable. So remember that when you look at other supplemental reports, everything other than the balance sheet and the income statement, they're really supporting typically numbers on the balance sheet and income statement, giving more data. In the case of the payroll reports, they're going to have to give more data with regards to breaking out the data by employee, and then we need year-to-date information per employee oftentimes, as well as the current paycheck and whatnot. So again, you can get some quite detailed reports based on the necessity of reporting quarterly, recording the yearly information, and then providing the information necessary to the employees as well.